we're just going to be looking at some of the basic reporting tools that we can use on QuickBooks. We're not going to go into too much detail because you are using a higher level of detail. You're more likely working with a professional like an accountant or a bookkeeper already, so we won't need to go into this bit. So this is the dashboard, which can sometimes you can see like a basic overview of the company. So you've got your bank accounts and Visa card there on the top right. Sales, you can choose here. So if I put, say, this year, or say last 12 months, you've got the amounts here. Just close down because this hasn't got any data, this company, for the last few months. It shows you a graph of the trends of sales. The profit and loss you can choose. So let's say this year, total income and total expenditure, and the total net income for this year, which we'll look at in a minute. Expenses, how much you've spent on different things for the last month, or you can change that to the quarter or this year. And invoices, how much we've got overdue, and anything not being deposited. That's the last 365 days. So what we do, we go to the reporting tab. We'll just go over a couple of the basic reports. So the first one is the profit and loss. So I'm going to you can choose the different dates here, but I'm going to say this year to date. So it's got all the different income types that this company has there, and any cost of sales. And then you've got your gross profit. So you've got your total income and your gross profit, the two main bits here. So the gross profit is worked out by any cost of sales are taken off the total income. So cost of sales, depending on what kind of business you have. If you make things or buy and sell things, then kind of your materials, your cost of the goods that you've purchased, they're going to be part of your cost of sales. If you are in construction, then the materials, along with some of the subcontract labour, that's going to be in your cost of sales. If you're professional service, sometimes any of the software that you use for serving your customers, if you don't bill that on, that can be a cost of sale, along with any of the billable expenses, as you can see here. So that figure there is the same as that figure here. And then under that line, you have other expenses. So any other expenses that are related to the business but aren't a cost of sale. So subscriptions, insurance, bank charges, rent, utilities, etc., legal fees, accountancy fees, anything else that you can name really that is a business expense, travel expenses, subsistence, can go here. Now, as you probably know, you can't claim on your tax return for entertaining customers, clients, suppliers, but you can record it on here. So, you can have it as part of a business expense. You can record how much of it you have spent on entertaining your customers or your clients or your suppliers. But just when you go to do your tax return, you know that needs to be taken off. So here we've got your net operating income. Now, if you have in multi-currency, you'll also have this line called exchange gain or loss. So that's to do with how the exchange rate changes, and that's something that's calculated automatically. And then you have net income. So if you can see that figure there, the 1487, that's the same figure that we had on the dashboard at the beginning. Now, if we go back to reports, just going to show you the balance sheet as well. So you're not going to need to know too much detail, but it's always good to know of your company what kind of things you're looking at. So again, I've got it this year to date. Tangible assets is things like large equipment that you might have. So furniture that you might have for the office, computer equipment, if it's kind of more than a couple of £100, if it's something that's going to last over a year generally, and it's proper equipment, then you can put it in here as a tangible asset. You don't have to account this way, especially if you're not a limited company, but it's something that you need to be aware of, and it's something you probably need to speak to an accountant or a bookkeeper about if you're not sure. If you put depreciation on it each year. slightly, it's separate than what you would do if you're doing your tax return. But that's just so you can be aware of it when you're looking at your accounts, if someone else does that part for you. And you've got your cash and bank at hand. So you've got the current account here. So that's how much is in their current account. Got debtors, so that's people that owe you money, people that you've invoiced that owe you money. So we've got for GBP, they've got £3,240. And in dollars, they've got $30,620.82. Well, that's in sterling, but that's the equivalent, sorry. Stock assets, so these people are people that sell stock, so their total stock is valued at 8411.93. Creditors, so you've got creditors amounts due and falling 1 year. So most things that you're going to pay on invoice are going to be that they're the trade creditors. So they've got £5,670 and none in Hong Kong dollars at the moment. The Visa credit card is a current liability because it's going to be paid quite quickly. You've got the VAT control account, which is the VAT that you owe. And here we go for the director's account. So this is going to be slightly different if you're a self-employed or a limited company. And we'll go through a few basic bits on the module on QuickBooks Self-Employed on what we do with money in and out for sole traders. But if you've got a limited company, as you know, your money and the business's money is completely separate. You're two separate legal entities. So when you put money into the account, it shows that the company owes you that money back. It's usually worth keeping it as a current liability, although sometimes you're not going to have it back straight away. Technically, it should be a current liability. If you owe the company money, this will be in a minus. You don't really want to get in that situation though, because you do need to pay that money back by the year end if you borrow money from the company. Now it says creditors amounts falling due after 1 year. I've got a bank loan showing there for £19,348.30. So that's a long-term loan, so it's going to be over more than a year. And where it says capital and reserves, you've got opening balance equity, which is just the equity in the company, retained earnings from previous years, and the current profit for the year. So the total capital reserves here equals the total assets less liabilities here. It's a bit complicated. It's not something you're always going to want to know about, but it's worth knowing what it looks like in case you do want to have a look at the report. Just two other quick reports that I want to have a look at, and they're ones we have had a look at in other modules. One is the open invoices. I'm just going to click on that now. Okay, so this is where we've invoiced customers and they owe us money. We've got Abercrombie International Group, Adwin Co, Benjamin Young and Jordan Burgess. That total is the total amount that the customers owe to our business. And obviously here you can see the date, the number, how much it is. Click on back. You can also look at what's called the unpaid bills, which is the bills that we've had in from our suppliers that we haven't yet paid. And again, here you've got these Cass Hayden, Jennifer Hargreaves, Christina Gibson, Mark Howard, an organisation of outstanding event planners. These are all bills that are on the system that haven't yet been paid from the company. And that adds up to the total creditors that we've got there. So that's it really. That's it for the reporting side. I do separate courses on QuickBooks, more tailored to you if we need to do it, and also have our 60-minute automation session with a time-saving offer. If you want to speak to me about that, then obviously let me know.